Hello again, everybody. This is Matador from freetradingvideos.com. It's 4:30 Eastern Standard Time, July 20th, 2009, and the spiders did a pretty good job today of following some good rules of support and resistance and draw a lot of support in here. Had some really good breakouts. After the beginning to the day, a lot of gap up into resistance like we talked about. Another test of that and almost 100% retracement of that run up. A lot of people on the hurt side started buying to cover, driving that back up, broke right back up into this previous resistance, had a higher swing low, another equal swing high roughly, another higher swing low, and then we pinched down into a symmetrical triangle that actually ended up breaking very nicely to the upside, finally getting past this resistance that we were seeing all day long. So 1, 2, arguably 3, 4 tests of that, and then finally a break of that plus the round number of 95. So this whole thing becomes resistance. And we had mentioned again in the morning in video that 95 was going to be a significant area. Perfect gap fill right back up into this previous high base consolidation on a daily chart. After that, nice run up to 95.20, pull back to support. Resistance once broken oftentimes becomes support like this. And now we're putting in another high base with one test. So no matter what time frame you look at, that is a very, very nice bullish day for the market. Not completely confirmed by the trend itself. If you look at this, we were hovering right around the 1.0 range for most of the day, but the trend cube, beautiful, right around 0.7 and 0.4 even at times of extreme buying pressure. The VIX, nice bleed off after the initial gap fill, and didn't quite get too far past the perfect gap fill of that. But this symmetrical triangle that you see now, we'll have to watch carefully tomorrow. So I could go on and on. The bank index, after a big run up in the morning, nice sell-off, lower swing high, big sell-off, and then kind of powered its way back on the breakout of the broad markets. So it was actually relatively weak compared to the S&P today. And when it finally broke out, that helped push the spiders a little bit of confidence in the broad market. So that's what I see in the broad markets. Of course, you can always use this as a layer by which to judge your stocks going forward. Look for relative strength and weakness, and go from there. So nice working with everybody, and I hope you have a great night, and I'll talk to you soon.